In this video, we're going to talk about Ocugen, trading under the symbol OCGN. Before today's video begins, if you like my content and my analysis, please check out my other stock analysis videos on my channel as well. Ocugen has been a subject of conversation for some time now, mainly because people wanted to understand where it may head towards with the right of distribution in North America. The issue that it has been having so far is that Ocugen is relying very heavily on whether Bahar Pharmaceuticals can deliver in order to profit from the distribution right. So they have been in talks with health regulators for some time now, and although there have been advances, they aren't going to be any speedy solutions anytime soon. Sometimes that's just the way it is. Meanwhile, Moderna, Pfizer, and some other companies have been filling up the demand little by little in a market that is already, in my opinion, past the prime of its timing, despite still having potentials in epilogues and different waves in the month or years to come. Recently, Ocugen released a statement saying that they are still talking with American and Canadian regulators, and there have been progress. With that being said, there isn't any substantial updates regarding whether they get to distribute in the short-term future, and that is what has been dogging the traders. This is why, like I said in the titles, Ocugen may double this week as soon as we have any sort of meaningful update from the regulators. So we don't know what those progressions are, not even if they will release the specifics about what those discussions were. So far, the speculation is that FDA may suggest Ocugen to ask for the kind of permit requiring them to do more phase 3 testings, which will take months before they can get a result out, let alone a satisfactory one. And this is why that overall, the stock is getting anticipated a lot by traders, but certainly not going against it. In fact, having a small position in it may be a smart move at the moment, given the stock progression. So let's talk about that. Currently, the stock is sitting at $7.88, which is a level of consolidation after some very volatile month. It peaked twice at almost identical prices, once in the month of February and another time in early May. This is our resistance level for the moment, around $16. But another very interesting discovery is that the support level is above $6, and it has been tested multiple times throughout the year. I feel like the price right now, even if it's not exactly at $6, does provide a decent entry point if you don't have any exposure in it. What people are really anticipating on the timing of the authorization is that whether they will come or not, and if they will come soon. However, if you're willing to put up the higher risk profile of the trade, then Ocugen does have enough volatility to make the trade worth it. In terms of probability, I would say that it's fairly reasonable to assume that it may go back to somewhere near its previous highs. By that I mean between $10 and $12 region. Basically, unless FDA confirms that Ocugen will not be able to distribute for Bahar Pharmaceuticals for the next year or so, there will be enough demand to support the stock at a fairly high level, which is anywhere between $5 to $6. Overall, the risk profile on Ocugen is fairly high because it relies on the timing and occurrence of one specific event. The previous case that came to my mind was Workhorse, relying on winning or not the USPS contract. And in the context of having no absolute, it is very important to keep your risk diversified in many different baskets. Ocugen can be a decent basket as long as you don't put up too many eggs in it. My recommendation for exposure is about 1% of your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.